What's up YouTube? It's Todd Horst here with Tasty Tracker, and I've got another small account challenge update. On Wednesday I did a video which catches you up to date until today, when today I closed the SPY position for a $104 profit. That one I moved up the limit a little bit just to get it to close. If we go over here to SPY and I type correctly, we can see we've had a good week here. I definitely could see the potential to come down and touch the 20-day. I don't think it will go much past that. And you know, who knows? Maybe we keep on chugging up here. That's fine. It was only a couple bucks that I would have closed out a bit more. But I thought while we have an up day, I'll close it out and then potentially re-enter. If it does come back down. If it doesn't, then I'll probably just not enter any SPY positions for a bit until I see a better entry. The next one here is SE with 182 profit. SE had a huge bump up. Obviously, that one was timed abnormally well. That was only a 2-day hold. I've had a couple of those recently, but that's always nice to have. It's just not always the case. But I'm really looking here for the 20-day to start separating itself from the 50-day more and get more of a increasing distance like you see down here. I'm expecting the 20-day to turn up, so when this comes back down and touches the 20-day, again, that will be a good entry point. At this point, it's staying in this channel very nicely, and yeah, so I got lucky on that one. Last one here, closing for the day, is Apple for $85 profit. Apple has been kind of disappointing in the premium level here. Actually kind of like where they're at right now. I think we've built a base up, and I could definitely see them legging up again here, even though we're not coming down to the 20-day. It just, to me, this looks like a bullish setup to me, especially going into Christmas. But I wanted to enter in another position potentially, but the premium right now is not advantageous from my perspective, so I stayed out of it. There is definitely room to argue that this is the top of a channel and that we could come down and bounce either down here or off of one of these SMAs. Although I think this is a good entry point, it could be better. I think there's more downside risk potential than upside at this current second, and I would be willing to take the risk if there was good premium, but there's not. So I'm just going ahead and closing the position here. We've stayed kind of stagnant in this area here for a couple days, and even largely since the whole way back here in early October, we've just been trading in this range here. And so if we're going to keep to that range, then we're at the top of that channel. If you're drawing a horizontal channel, this is why charting is subjective, because you can basically make a case for any number of things. But for me, for this position, it's expiring in 2 weeks, so I'm just going to go ahead and get that off the table. No, I'm sorry. I had it open for 14 days. Let's go into the history. They were actually January expiration, but I held it for 2 weeks. Apologies on that misstatement. Okay, so what did I open today? 4 more positions: Sedg, Microsoft, DG, and Facebook. So let's jump right into Sedg. So this could be seen as risky. It's downward trending as far as these 2 high points are concerned, but with if Biden takes president, as has been predicted now after the election, that I definitely still believe in solar. We've come down here. We touched on the 50-day. I'm definitely anticipating that the 20-day will make a bullish crossover, which should give a nice injection of interest. The RSI here is primed up to have one of these types of runs where even though traditionally speaking over 70 is to be avoided. When you're getting close to this, things really heat up between these last couple points. So yeah, it's a similar area to here or here. When you just start hitting that range, you can melt up another $40. You know, that went from 120 to 140 or 160 here, and then it did it again here in this range. So to me, this looks like we're going to have a bit of a cup and then go up, but that's just what I'm seeing. Obviously, again, up for interpretation. Microsoft's they've just been doing right thing after right thing from my perspective. As a company, they've come a long way, and here we are, this huge period of consolidation. This is relatively a long time as far as stocks are concerned, with little to no movement at all. It's just been hanging there. And meanwhile, I got a pretty good premium on this. Let's get up here, collected 400. So 200. Normally I'd be looking for 160. Because I did two $5 wide contracts. So yeah, so about $80 extra premium than what I would be typically looking for. So premium is still good, and the SMAs are good. I think we'll have a rip here very, very shortly where it's going to jump up, and probably we'll get a little bit of resistance here, but I think we'll get through that even. Just what it feels like. Okay, Dollar General had good earnings, but a bad reaction, and so you know, I don't think there is much downside here. Again, the earnings threw it down here, but they've been performing, and I think they will continue to perform. You can see the trend line I have here is just below the 50-day, and to me, that's where it's the downside risk is to. So maybe down here to 210 to 11, somewhere in that range, which is exactly what I sold. So I sold the 210 leg, which you know, puts me on my trend line that I've had here for a while. And then these are all for February, by the way. Right here, you can see they're all for 219. So yeah, so that gives me the whole way out to here to be above 210, something like that. So I think that's very, very, very possible. I am expecting when we get out here, we'll be around the 225 range, which is already at the top of this range, so well within the possibility. That doesn't even have to break out of its current channel that it's in. Facebook. All right, so again, just going off of my own charts, the SMAs are in the right order, with the 50-day curling up. The RSI looks primed. MACD is but we've been bouncing back and forth between this channel. So I read the current position here as a bounce off of the 20-day near the bottom of the channel. The 50-day is the bottom of the channel that I have drawn, and then we'll see a curl up here very shortly. Again, I think we can very easily make it to 295, and then 300, 305 in that range. Again, very easily that would be enough for me to exit, probably with 50%, and that doesn't even have to break all-time highs back here from the I don't know if it's their all-time high, but their recent high from August. So that's all still with the anticipation that we can get back up to there. Okay, that's the last position there. So over here, chart looks pretty good. I'm at around 11.5 cash, which again, I'll probably have to get that up to 13 or 14 for me to cross over the 10K. Getting closer, picking up, if you notice the number of positions I have to put on at a time to get the, I'm churning through positions quicker because I'm having more positions on, and more collateral out there. And if we go over here to the account balance page, I religiously log here, pretty religiously, and you can see whenever the extrinsic gets down here to this 1500, 1900, I re-up and get it back up to around 25 is the sweet spot. Obviously that will change with the account size you have, but you'll see that pattern. You know, you'll gradually be able to work up and have a higher and higher extrinsic value there. That also depends on the cash and the extrinsic and stuff. Depends on whether you have stock and stuff. In my IRA, I have half my account tied up in long-term stock positions. So that does change your cash and your extrinsic value. But anyway, yeah, so let's run through here real quick. I still got 1,500 in reserves. So again, if all hell broke loose and these all became losers, then I would still be able to start off basically where I started. And even in the COVID crash, I halved what was deployed. So, you know, I could probably walk away with three or four grand, even if the market completely blew up at this point. But anyway, so SQ is in a good position. Double clicked. Facebook. So now for a bunch of these, I have the January and February positions. So to keep this cleaner, I click on these and group them, and then you can see just what that spread has, which I know if you're using Robinhood, you would see it per spread. I also didn't set up the February closing order, so I'll go ahead and do that now. Okay. So if I take off that and just do the January, the upcoming one here, and then that I've got a pretty good position on that, obviously, and today's is fine. Amazon, Sedg, Microsoft, I have 2. So there's February and January. Dollar General, I have 2, but I didn't group this one yet. So there's January and February. Exact same strikes. When it's just trading in a range there, it's funny how you can do this for several months sometimes. And Baba is obviously a big loser. Right now I could close that for $3.90, so I could get $110 back. And then subtract the premium that I collected, or add it to 110, and so it wouldn't be a full total loss. But let's go over and look at Baba's chart. It's a down day today for Baba. Yeah, can't type. But we came back here and are sitting right at the open, so it jumped up and then came right back down. But to me, that's still pretty good that we're not coming down here and engulfing yesterday's candle or anything like that. So I think there is still a potential that I can close it up in here or even roll it. I've been saying that for a while. But again, at this point, it's $100 to $110 would be all that I could get out of it. To me, the risk reward is I'm basically just writing this off as a loss, and so the anything I can do to eke out a little bit more of that or roll it is definitely advantageous. Don't think there's anything else I want to say today, so I'll leave you with that, and you have a good one, and I'll talk to you next time. Bye.